All right, thanks for coming. I tend to talk a lot about funding these days. I'm from Canada, where recently we started Execution Labs, which is a seed fund and incubator accelerator specifically for games. So for those who are familiar with Game Founders nearby in Estonia, it's similar. Ours is a bit longer program and we provide a bit more funding, but it's along the same lines. And you know, it's an interesting kind of marriage between games and the venture and funding world, which often we don't really sort of play well or play nice together. I don't suppose there are any people, any investors or VCs in the room today? No, you're all looking for money as opposed to having money. Yeah, well, exactly. Yeah. So, and I'm guessing even if one of you is an investor, you're too afraid to put up your hand, and then everybody looks at you. But so definitely this sense that indies and developers tend to think about game first, product first, design first, and are often not really thinking about the business or the funding or the money side, or if they are, it's really in the context of like, oh crap, I have to buy food and pay rent. Hey, there's a fun video that I'll show when I think of business or money and indies. So we'll just play this quick.
Today I got an Xbox 360. I got it at Costco in one of those bundles where you get an extra controller and a copy of Halo 3.
Yo bro, get the new Madden? Hi, my weak friend code is 199. Who wants to trade Pokemon? I've got a Jiggly.
I love bowling.
Street Fighter 4. Game Boy? I made a game in my room. It's called Box Hero. Just made it in my spare time. I'm trying to start a company maybe someday, make a lot of money with it.
Sponsored by Microsoft. This was one of the opening videos. There's still a few seats, folks. So there's one there, there's one over here, one there, one there. You can still find your way in. So again, I mean, there's kind of odd marriage between the business and funding side of things. Was kind of cute when the guy was saying he's making this game in his spare time and maybe starting with, as soon as he says make some money, he gets punched out. But does anyone know who this is? Phil Fish, right, from Indie Game the Movie. He's actually a friend of mine in Montreal. He's from Canada as well. And there's this kind of romantic sense about what it means to be indie, or a lot of us think in that way. But we do see others that are, don't necessarily have that discomfort with receiving money. Of course, Tim Schafer really being famous for unlocking alternative forms of funding. In his case, from Kickstarter, and sort of getting away from the publisher as really being the bank of the game industry. And then, of course, Notch with Minecraft. I assume there'd be images on Google if you type Notch and money, and this was one of the first ones that came up. So I didn't make this horrible image, but no one discounts Notch as not being indie anymore because he's commercially successful. And so I think if we look at a lot of what's happening in the industry, certainly from the big platform companies, you have Sony and PlayStation and Microsoft and Nintendo that are obviously also going after indies, and I think there's great opportunity there. If you look at examples like Supercell, they started as a small startup company with some initial seed funding and support from from the government, and of course we all know the story there of making billions and billions of dollars. That's at one end of the scale as a startup, as a small indie, and kind of growing on a massive level. But then you still have great examples like Vlambeer, right? Ridiculous Fishing with Rami Ismail, two-person team, creating a small game. In this case, Ridiculous Fishing. Last year was, I think Apple named it the best game on iPhone, or best premium game on iPhone. So so that still means that there's room for this kind of romantic sense of what indie is or means. But So when I think about indiness, I think it's important to understand, what we're talking about. And I think about indie across two spectrums. One is creative freedom, and the other is legal freedom. So creative freedom meaning, to what extent do you as a creator are you able to make the games or work on the things that you want to work on? And then legal freedom, that really just means sort of structurally. Are you your own entity? Are you a standalone entity, either as a solo worker, as a freelancer, or as an independent or a corporation of your own? And so indies, to me, really fall in this sort of quadrant here, that you have creative freedom to work on the ideas you want to work on, but also you are kind of legally independent. You're your own structure. Down here would be more so outsource or work for hire, meaning you're legally independent, but you don't have creative freedom. Right, you're on the bottom end of that spectrum because you're doing someone else's, working on someone else's ideas, and so you're not, you may be independent as a legal structure, but you don't have creative freedom. So you wouldn't be indie here. And then this here would be more sort of the standard internal studios where you lack both freedoms. You're working on the next Call of Duty, and so you don't really have that creative freedom. And you're an internal studio at Activision, so you're not legally free or independent in that sense. And then up here would be a very rare, what I call skunk works, which is maybe a large publisher that has a kind of an experimentation or innovation lab where you do have some creative freedom. You're told to go off and create something for Oculus Rift or something, but I mean you're not legally independent because you still exist within a large entity. In terms of funding, certainly venture funding, the real opportunity only exists here, right? I mean, this side here tends to be public companies or large studios that already exist that don't necessarily need that kind of funding, and usually outsource and work for hire studios. The profit margins on that are too low, and generally is not an area, if you're down here, that you can go get venture funding. Now, there's always exceptions to that, and certainly there are government programs which don't distinguish between the two. But generally speaking, what the advice I'm giving, the things I'm going to be talking about, are in the case where you are in fact indie and you have that creative freedom and legal freedom. All right. So the other thing to sort of think about is, what are you trying to fund? There's a big difference between funding your company versus funding a single project. And the sources of funding are often quite different, and I'll talk a bit about that as we go along. The deals that can be made, the percentage, all this kind of stuff really changes depending on whether you're funding your company or your project. Generally, what you're giving up in terms of economics, in the case of a project, you're exchanging those funds for future revenues or revenue share on that particular project. Whereas in the case of a company, what you're exchanging for the funding is a share of your company, equity. You're selling shares or ownership or part of ownership of your company. And then the other aspect is a question of control. In the case of project funding, you're often giving up control over the IP, and certainly as independent developers, we're very hesitant to do that, where a publisher or project funder says, well, since I'm taking all the risk with the money, well, then I want ownership or certain rights over that intellectual property. And so generally, when you're looking for project funding, what you're really doing is negotiating the economics and control, and the economics being on revenue and the control being on the IP itself. Whereas for a company, the control question is really at the board level. That if the funder gets enough equity stake, then they tend to get a board seat. It doesn't mean they control your company. If someone buys 10% of your shares, it doesn't mean that all of a sudden they're the boss and they're telling you what to do. But certainly, if they own a larger chunk of the company, then there is questions about control and direction for the company. And so even just at this very high level, thinking about and pursuing funding for projects, the control and economics question is quite different than if you're pursuing funding at the company level. So just quick, and I don't know if you can see this well at the back of the room, but in terms of project funding options, I would say most developers tend to be somewhat more familiar with some of these options. And I mean, depending what stage you're at as a developer, often your day job or a past job serves as the source of funding, meaning you're self-funding. Credit cards, sort of personal debt. I don't recommend that as a source of funding, but it does happen. People do that. Friends and family, whether it's because they still let you live at home or because you have a rich uncle that says, here, that sounds like fun. Here's some money. This idea of patronage is quite rare, but does happen from time to time. There's a very famous indie developer out of Argentina named Daniel Ben-Mergui, who has a patron, just a really rich guy that says, here, take some money. I want you to exist as a indie. I don't want you to go work at EA. Just keep doing what you're doing. And so he's his sort of like Renaissance style of patronage. But that doesn't happen very often. More and more we're seeing festivals and contests providing cash prizes and rewards, but it's kind of hard to build a business on the assumption that you're going to be winning festivals as your source of funding, but certainly it's a nice option. Crowdfunding has been getting a lot of attention in the past year or two. I don't know how prevalent it is here in Poland, or even if you guys can use Kickstarter or Indiegogo. Or you can't use Kickstarter? Indiegogo? You can use Indiegogo? Yeah. Have there been any sort of well-known Polish examples of folks getting crowdfunded? Or not even? No?
Waste Interactive, I think.
Okay, so...
There are also Polish crowdfunding companies.
Oh yeah? Okay.
Smaller ones.
So a couple of examples, but no Tim Schafer, no Obsidian, all this kind of stuff. We're really, Kickstarter, they put out their numbers a few months ago. It's like, I think almost $1 billion just for games, or hundreds of millions of dollars. I forget the exact number, but it's quite intense, the level of funding that's available. Now, the challenge, we can do a whole day-long workshop just on crowdfunding. Of course, the challenge there is primarily you have to already be famous and or have some kind of street cred in order to get the volume of funding and attention to have a successful campaign. And it's quite rare that if you're just sort of, a handful of random developers with no brand recognition and no fame to be able to succeed. Now, obviously it has happened, it's just a lot harder to do so. And so often you end up in this weird situation where if you're too ambitious in terms of your crowdfunding campaign, like, I want $1 million, and you don't have the fame and attention to sort of bring the crowd already, then you're guaranteed to fail. And so you have to become very modest in terms of how much you ask for, and I think the common amount is more like $20,000 dollar range. But then how far is $20,000? I don't know about Poland how far that gets you, but certainly in North America it doesn't get you very far, and so you kind of make this weird compromise where you want the money, but you have to be very modest and humble about how much you can ask for, and then in the end, how much does it actually help you? In other cases, we have sort of the Minecraft option, alpha sales or pre-release sales. Steam, of course, with their early access feature is the same idea, right? You're pre-selling the future awesome game, but that also is kind of hard to get that credibility. But certainly we've seen examples, and isn't DayZ a Polish?
Yeah. No.
Well, he's Czech, right? DayZ. Anyways, okay, so. But anyway, so alpha sales is certainly an option. Publishers remain to this day still one of the largest sources of project-based financing. Publishers tend not to be interested in your company. They really are just interested in that particular project you're working on, but that still remains a fairly large source of finance. Government programs, depending what country you're in around the world, some governments are more generous than others. Although, generally speaking, governments tend to give you what I call post-incentives, meaning after the fact. So in Canada, we're very famous for having tax breaks. But tax breaks are irrelevant to start a project, right? They give you a tax refund a year and 6 months after, right? You have to have the $1 million, spend it on computers and labor and programmers and build the game. Then at the end of the year, file your taxes, and then 6 months later, the government gives you back your tax return and a refund. So you have to survive. You have to exist and survive for 18 months before the tax incentives come. So although Canada is a great place to make games, this idea of tax breaks and tax incentives are usually only relevant in the long term, not in terms of funding a project on day one. In Finland, it's a bit of a different story. They have Tekes, which actually provides project-based financing upfront as opposed to after the fact. In Poland, I'm not familiar what options exist, if any. And you're smiling, which makes me think there are none. Anyway, so maybe there are, and we just are not aware of them. Some of the programs often are not called game funding program. It's more like a tech fund or innovation or startup. So don't just Google for Polish government game funding and expect to get results. But look more broadly at other startup, innovation, technology, media, culture type funding.
From European Union.
Sorry?
We have from European.
On European Union, yeah. So then there may even be options more at the European Union level, at the EU level. But again, it's rarely that it'll be so obvious called game project finance or fund. So do look a bit more broadly. I make a note here that banks are not really an option. Now, admittedly, I don't know how the banking system works in Poland, but generally banks want to secure against a big revenue stream, or they want to take your house in case you screw up, and so it's just, banks are just not really a good option. And then, less relevant today, but this idea of project bonding comes more so from the film industry, where you have an auditor and a bank and a bonding company that sort of gives you money for a whole slate of games. But this is more for AAA sort of large scale production. So again, not really relevant for project funding. So a lot of options still exist. Crowdfunding being the sort of the popular one today, or alpha sales. For those who do plan to embark on crowdfunding as an option, take your time to do the research. There's a lot of information about how to build a successful campaign, but be realistic. Unless you're someone famous, and then you're probably not sitting in this room. So, all right. So that's project funding. The funding for company side of things is quite different. And this is now where we go more so into the realm of venture. So venture capital, angel investors, VCs, all that side of things, they really don't care about any one project. They tend to care about the company and what the pipeline of projects or vision, long-term vision of the company is. They're betting on a team, they're betting on that company vision. Each one game you make is just sort of one step along that longer term vision. So they don't really care about the game you're making right now. And so probably the biggest mistake I see developers make is that they want to get funding for their project, and then they go see a VC and say, hey VC, I have this project I want to fund. Please give me some money to make this project. And really what the VC wants to hear, or the angel wants to hear, is what's your long-term vision? How's this company going to grow? What's the long-term opportunity? And they don't really care about the one game you're working on now. But the venture funding side, it really depends on what stage you're at as a company in terms of your revenue. So this graph now is profits on the vertical axes and the zero and time. So at the very beginning, you're making zero profit. Usually most startups end up spending a lot of money to make their first game, then hopefully they start generating revenue, and then you have you break even, and now you're making profits and such. And what kind of funding or who you go talk to really depends on what stage you're at along that curve. So in the very beginning, when you're starting out and you have no profits, no revenue, you tend to go get funding from what we call the 3 Fs, which is friends, family, and fools. Or what we also tend to call love money, because only someone who loves you will be crazy enough to give you money at that stage of your company. And it's relatively small amounts. It tends to be in this kind of $10,000 to $50,000. Apologies for using dollars. And that amount sort of can shift depending if you're more kind of in the California, Silicon Valley region versus, probably your distance from the Silicon Valley. That number will fluctuate slightly. But just for argument's sake, it's in that range, and also kind of your own money, your sort of bootstrap money. Then once you've made a bit of progress, you've taken the money from the drunk guy at the bar and your rich uncle, and you have a prototype, and you're starting to work, and your team is coming together. You're starting to build your company. Then you tend to go to angels, and angels are, essentially they're just rich people, and they tend to be people who got rich from from exits from their previous company. So Google came in and bought your company for $1 billion. Now all of a sudden your pockets are full of money, and so you're bored, and so you just go and sort of invest in cool projects and mentor and help out and stuff. Now the problem there is that there's no website that say here's all the rich people, and then you can call them up and say, hey, rich person. So they're kind of hard to find. You tend to have to network and go to startup events and other things to kind of figure out who the rich people. Rich people that do, early stage investing, angels. So they're hard to gain access to. But if you can find them, they tend to be good partners, very very helpful to a company. The other challenge is that we don't have many angels from the game industry, right? So what we would want to have happen is a game company gets super successful, super rich, and then Microsoft buys them for $500 million, and now all of a sudden the studio heads and executives all have money in their pockets, and they're kind of bored with what they're doing, and now they're going to go and help out all the up-and-coming studios. We don't tend to have a lot of that happening in the game space, whereas you have that, all the time in other tech industries. So, we don't really have a big community of angels, but they exist. Anyway, so the funding here tends to be in this sort of 250K range. After that, then it's the early stage or seed VCs. And this is still pre-profit. So seed or early stage venture capital firms, they're still kind of betting on this vision, right? You're showing them everything that you've done so far. Whoops. Okay. You've taken your friend's money, your family money, you've made a prototype, you've used that to convince an angel that you have a good team and you have solid process, and so now you have something more robust. It's a soft launch game on iPhone. Is that a question? Yeah.
Yeah, that's a question. Should we seek for a seed VC after the product is finished and it's ready for launch, or earlier? Because this is still the time when we don't have.
So. The answer depends on what platform you're on. So let's say if you're doing something that's free to play, for example, in this time frame, the chances are the game is already available on the App Store, perhaps just in test launch, so not globally, and is producing metrics. So you can go to the seed VC and say, listen, we've taken $100,000 from friends and angels, we've built a team, we've produced a prototype, an MVP, we've released it onto the App Store in New Zealand and Sweden and Canada, and already we're seeing 60% retention on day one, and these really strong results. And here's our vision for how we're going to take that experience and do 5 more games and go in this direction. And then based on the strength of the data in soft launch and the awesomeness of your team and the vision you have, then a seed VC will likely invest. If you go to them before the game is in soft launch, they're just going to wait. They're going to say, "Oh, it sounds great, but prove to me that what you're saying is true, and show me the results." Yeah, metrics, or what they call traction. So they do want to see traction. I mean, they don't need to see that you're making tons of money, right? Because you're still in this pre-profit phase. But there has to be some sense of validation that what you're doing, your vision, the market you're going after, the type of games you want to build, your process, etc., is meaningful. Okay, so now the seed VC is giving you some money, and you're making profits. Now is when you would tend to go to the normal VCs. Normal VCs want to see that you're making revenue, that you're generating profit. and they're investing in the sort of 1 to 5 million range. Just as a ballpark. The graph's not finished, so there's still one more. And then when you're really, really successful, then there's a whole other category of VCs called growth VCs or bio VCs, et cetera, where they're investing upwards of potentially 50 million, 100 million plus. Okay, now the graph is done. You can. Now, so what tends to happen is a lot of people will go talk to the wrong people at the wrong time. Right? Someone will say, well, you should go get some venture money, and they call up the VCs, but they're over here in terms of time and profit and product. And the VC says, well, I mean, you seem like a nice guy, but come back to me when you have something, right? Or they've struggled and sort of bootstrapped, and they're over here about to launch, and then they go call up their friends and family and say, we need $1 million, and unfortunately your uncle is not that rich, so it's bad timing. I mean, this is an oversimplification of the process, and obviously there are many exceptions along the way. But generally speaking, this is kind of the flow, who you would go talk to at what time, and it makes a difference. And again, these options are primarily if you're seeking to fund your company, right? If you're only seeking project funds, you would not embark on this path. You would go look at the other options on the other slide, publishers and crowdfunding and early access, et cetera. Now, the other thing which I don't have lines here for is that somewhat counterintuitively, even though the dollar amount of the investment increases over time, right? So the amount invested goes up, right? So here it's very small and it continues to get bigger, and growth VCs are investing a lot of money. So if I was to draw a cash investment line, it would go in this direction, but the risk goes in the reverse direction. Right? Even though here the amount of money is very small, the risk is super high, and risk actually goes down over time. So that even though they're signing checks of $50 million, the risk for them is quite low, because as a company you've already gone through the valley of death and have come out successful and are generating significant revenue. Whereas your mom that gives you $10,000 because she loves you is in fact the riskiest investment for her to make, and the chance of her seeing any money back is very low. So the risk size is actually inverse to check size in that sense. The other thing you need to factor is what you're giving up versus how much money you take. And so if you're for example going back to project funding, if you're taking Kickstarter money, you're tending to get a small amount of money, relatively speaking, but you're also giving up very little control. Right, because the backers essentially that's just donations, or it's a gift that they're giving you in exchange for a T-shirt or whatever. So the loss of control is quite low. VCs, you tend to be getting more money in general, but amount of control loss is sort of in between. Because VCs, they don't understand the game business, they don't really want to go design your game. They may have certain rights over how you run your company, but generally you're not giving up a tremendous amount of control. And then ironically enough, sort of the classic, publisher development deal oftentimes ends up being the most amount of money that you can get, but you're also giving up the most, right? So a publisher will say, well, I love that Ninja game, here's $1 million, but now I own that IP, as I was saying before. And so you do have to think about what you're trading off in terms of the size or amount of money you're pursuing versus how much you're willing to give up control, whether it's in your company or control of the project. Although there's another factor, which is expertise that you gain. So when you do a Kickstarter campaign, the expertise you gain or support you gain that's non-monetary is very minimal. I mean, the users maybe give you some feedback on design or whatever, but really it's minimal. VCs may have some expertise, but it's much more sort of general about business. They're not really going to help you run your company or design your game or sort of the strategy and so on. But they do have general business expertise. Then of course publishers, as much as developers tend to hate them, often have the most expertise to share in terms of marketing, sales, longer term strategy, game development, etc. So again, that's sort of things you have to factor. And more broadly, you do have to think about more than just the money. Because you are sort of getting married with, whether it's well, I shouldn't say your mom, but whether it's your sort of friends or family, or you're taking money from VCs or publishers, I mean, it is a partnership in many ways, and you need to think about more than just the money in that partnership. As I was saying, one piece of that is business expertise. So if you're just 5 programmers and you know nothing about running a company, nothing about marketing, nothing about business, then it's not just about the money. You do want to partner up with someone that does have some expertise that can help you out. So for example, an angel investor could be that kind of mentor where they come in and not only do they provide some money, but they do provide some coaching and some guidance. Access is another big one, and by access I mean access to gatekeepers, press, other partners. So in the mobile space, an example of a gatekeeper would be Apple. Right, so for example, Execution Labs, we do provide funding to the startups, but we also have friends at Apple and friends at Facebook and friends at Google and friends at Steam, so that if one of our funded studios says, well, we'd really like to get onto Steam, who do we talk to? I can pick up the phone and call my friend at Steam and say, hey Steam, I have one of my studios from my portfolio that needs to talk to you, and they go right away and are able to talk to the Steam executives. Now, there's no guarantees that they're going to get onto Steam, but at least it speeds up the process. Or for Apple, we have friends at Apple. So 2 of the last 3 games that we launched that were from our portfolio were featured by Apple. Again, no guarantees. The game still has to be awesome, all that kind of stuff. But someone who's giving you money, if they can also bring that kind of expertise or that kind of access to gatekeepers, etc., is important. And then in certain cases, distribution is relevant. So a publisher, they're not just giving you money, but usually they're also giving you distribution, through their own channels, which, depending on the publisher, could be tens or hundreds of millions of eyeballs. So, there's a lot more to be said here, but just to sort of think in the sense that it's not just about getting a check. It's also about what other sort of gaps or what other needs do you have as a company or as a startup. So now I'm going to spend a bit of time on some, tips, some advice. And the first one is what we call the funding gap, I guess. And I use a gas pump because this is often the analogy that we're told from investors. Is investors never want to give you money that's only going to fill half of your gas tank, and you're not going to get around the track if you're in a race. They want to know that the gas they're giving you, the funding they're giving you, is going to get you all the way around the track. And so as a developer, you have to think about, if you're taking money from someone, how far around the track is it going to get you, and is that endpoint satisfactory to that investor? So they don't want to hear that, I'm not quite sure where I'm going, what direction, I have no money, I have to pay my workers and buy food, just give me a little bit of money so I can keep going. Right? No investor is going to give you money to keep going. They want to know that they give you this money because you're going to hit this milestone and reach this deadline and release or do whatever it is that you say you're going to do. And oftentimes the way the investors work is you use the earlier stage money to get to the sort of the next lap around the track to then convince the next higher up investor to give you more money to go around the track once more, although it's a different track and the goal looks is defined differently. And so the worst situation you can be in as a company is to take someone's money and say, yeah, don't worry, it's going to get me around the track, and here's the results at the finish line, and then you don't get all the way around the track, and you're looking at the finish line there, and you're here with no more gas in your tank, and the investor is saying, well, how come you didn't get to the finish line? And then you're like, well, give me some more money, and you end up in this very awkward situation where you need the money to get the finish line that you promised you would get to with the original chunk of money, and it's a very sort of precarious position to be in. So be mindful of the gas in the tank and getting around the finish line. Or oddly enough, another analogy that's often used is building the bridge across the river. It's funny. Half of the VCs you'll talk to, they'll talk about the gas tank and the racetrack, and the other half will talk about the bridge across the river. And they're like, well, if I'm giving you money to build the bridge across the river, I don't want you to stop halfway across the river and fall into the water. And so it's either the gas tank or the bridge. But anyways, so I use the gas tank one instead. Another bit of advice is, this is my sort of little image to represent networking and just meeting people. Oftentimes as developers, we tend to be somewhat more reclusive and or introverted, and we don't tend to sort of network and get out there. Now, of course, you guys are all sitting here in this room, and so you're by default the ones that are less shy. But I would even amp it up. I mean, last night there was the Pocket Gamer pitch event. How many people were there last night? All right, so not enough of you were there. I mean, everybody should have been there and presenting and pitching their project. We certainly encourage the teams that we invest in to get out into the real world and talk to people and show their game as early and as often as possible, and really much earlier than they're comfortable with. And I think that's quite important. One of the things that I've seen time and time again is this sort of notion of serendipity. That you go to an event like the Pocket Gamer pitch thing last night, you really don't know who's going to be there. You go there with your demo of your game, you start talking, this guy sees it, and this guy sees it, and he sees it, and then it's, oh crap, I was just talking with a publisher that said they were looking for a tower defense, you should talk to this person, and you just don't know, you can't predict ahead of time that those kinds of sort of interactions are going to occur. They're certainly not going to occur with you sitting in front of your desk all the time. So you do have to force yourself to get out there and network and communicate, bring your game, present, et cetera, et cetera. Which leads to the other one, the next point, which is the pitch. So last night it was the big indie pitch. And I think of the 30 developers that were there, very few of them actually practiced a proper pitch or proper presentation. They just came and they said, I have my demo and I'm just going to talk about my game. That's very different than preparing an actual pitch. And the thing that's challenging with a pitch is you have to know who you're talking to. Because how you pitch to an investor is different than how you would pitch to press, is different than how you would pitch to a publisher, is different than how you would pitch to an angel. And so you do need to think about, what are the motivations and what's the person interested in across the table. And so as I was hinting before, if you're pitching an investor, you're talking about the team, you're talking about the roadmap of the company, of all the products, you're talking about the vision, your competitive advantage, all this kind of stuff. Whereas if I'm pitching the press, I mean, usually they don't care about that vision stuff. They want to know what the gameplay is all about, and so show them the game and you pitch them about the development process and the design ideas and so on. So you have to be ready to have different versions of pitches. You have to be able to practice them. You have to be able to, what they call the elevator pitch, which is you have to be able to convey what's special about you, your company, your game in like 90 seconds. And most developers, I mean, they're just not aware of this, so they don't want to take the time to do it, or they think it's uncomfortable because, that's sales and I'm not sales. And the reality is at the end of the day, we're all salespeople for our projects, right? We're all salespeople for the visions of our companies and our studios, and you can't not be a salesperson. You don't have to put on a suit and sell it like you're selling a used car, but you have to be able to communicate the vision and what's special about your project. So there's a lot of websites and videos and books on how to prepare pitches, and so I mean that's a whole day long workshop in and of itself. But take the time to prepare this. My other tip is love the suits. So whenever I think of lawyers, I think of the G-Man from Half-Life. That's, for those who don't know, is the creepy sort of mysterious guy from Half-Life 2. Not all are there any lawyers in the room? Okay. Oh, right. So, well, clearly you're far more handsome than. I apologize. Anyway, so a lot of people don't like lawyers. No offense. I'm sure you're a very nice guy, but you need to involve lawyers. If you're taking money from professional investors or publishers or anyone who does that for a living, you're gonna get screwed, even if they're the nicest publisher, the nicest investor. You'll get screwed less, I guess, but you're still gonna get screwed. So you have to involve lawyers, you have to involve people who actually understand what they're doing. I mean, I've been doing this a long time, but I'm the furthest thing from actually well, knowing what I'm doing, but we get lawyers involved from the very beginning, and it's super, super critical. And if you're a designer, artist, programmer that has never looked at a term sheet or shareholder agreement or any of this stuff, one, you're barely going to understand what it's saying, and there's all kinds of hidden stuff in there, even if it's unintentional. So don't be afraid of the lawyers, and I'm sure he'll help you out, and he's not so scary. 2 books I want to recommend. For those who want to, at least on the venture side of things, is Venture Deals. Now, admittedly, that book is geared much more towards American-style investing, but I think even reading that, it'll still be quite informative. And it really digs in deep in terms of all the nitty-gritty of venture investing. And then another kind of just generally good book is Art of the Start from Guy Kawasaki, in terms of how to think about your company, long-term vision, building a pitch, who to talk to, a bit of what I talked about, the different stage of investment, all that kind of stuff. So 2 good sort of high-level books. There are, in fact, many, many other books. None of them generally talk about games or are game-specific, but we know about games. So we can go get other books that don't have to be about games per se. And then more generally, and in fact, I was really happy to see the Lean talk right before. If you're a startup company, I cannot emphasize enough that you should be reading the Lean Startup and thinking about that in terms of how you produce a game. Often investors want to see that you're thinking with these methodologies and philosophies in mind, because that's how they think about investing. And we don't have time for me to go into that, but when you read the book, it'll all make sense to you. And I hope with that, you've got some sense now of how deals are done and who to chase for money and where to get help. And thank you very much. I think we have a couple of minutes for questions.
Yes, of course. Do you have any questions? 2 or 3 questions.
Yeah, go ahead.
You said that in the later stages the risk is lower, but I'm sure that some of the projects fail in some companies. Do you analyze why they failed, and can you tell us what are the most
Why do projects fail?
or companies that you invested in?
Yeah, I mean, generally at the very later stage, a company is quite large, has 100+ staff, has significant revenues, and usually does not fail because it's sort of gone through all the gates to succeed as a company, and then a company comes in and gives 10, 20, 30 million dollars to accelerate that growth. That's a much larger discussion about why successful companies fail. Often this has to do with shifts that occur in the market. So like Zynga was hugely successful on Facebook, and they were very slow to adjust to go to mobile, and then Facebook changed their virality policies, and then they were kind of left in the dark. And just not to pick on Zynga, but that's one example. So oftentimes the failure is unpredictable because you can't necessarily predict the disruptions or shifts that are occurring in the marketplace. Yeah. Other questions? Yeah.
I know where to find friends and family, but where can I find some fools?
Some fools? At the bar. I don't know. Yeah, I suppose fools are just less rich angels in many ways. Part of finding the fools is about being out there and networking and sharing what you're working on and showing your project. And maybe the fools will come find you because, everyone's talking about what you're working on. Clearly, you will never find the fools or the angels if all you're doing 100% of the time is programming your game. Obviously, production and execution are key, but you have to be out there in the world and meeting people and sharing what you're doing. Yeah. Cool. All right. Yeah.
Is it that that you can contact with the Steam and others publishers?
Yeah.
In what etap of our game can contact with you or with your company?
Yeah, so Execution Labs is a Canadian-based program, fund and incubator, and unfortunately we can only fund companies that are legally set up in Canada. So in that sense, I'm not here recruiting new investments and stuff. I'm just here to share knowledge. So yeah, we're restricted to Canadian investments only.
You can move to Canada.
Well, you're welcome to come to Canada. It's a very lovely country with lots of tax breaks. But.
When do you usually come in?
Sorry?
When do you usually come in?
So we, I mean, I didn't really spend that much time on what we do specifically, in part because it's Canada only, but you're welcome to check executionlabs.com where we describe our model and funding process in really great detail. But we come in at the very beginning. So our usual...
So you're the fools.
Sorry? Yeah, we are the fools. Yeah, absolutely.
Idealists.
Idealists, yeah, because essentially what we did is we convinced some investors to give us money. So we found the angels, we found the early stage VCs, and then we turn around and take bets on startup companies. So we are the first dollar into a new startup, even to the extent that startup doesn't legally exist yet. Mm-hmm. So we really work with the teams. Now, the people we invest in tend to be experienced. They're coming from Ubisoft and BioWare and EA. I mean, Montreal and Canada more broadly has quite a depth and lots of experience in the game space. So we're very fortunate that we can take these foolish bets on startups, but the people running the startups are 10-year veterans that have shipped 3 Assassin's Creed and Tomb Raider, and so there's risk, but it's not so risky. But yeah, I mean, you can check the website for more details. All right, I think we're out of time.
Yes, we are out of time.
All right, and I'm here for the rest of the show, so happy to chat with folks the rest of the week.